Hello, today is July 15th, 2017. Let's go over Thursday night's calls. I said if the market were to continue higher, it would have to take out Thursday's highs promptly, and that shouldn't be too hard. That's what happened. I looked for a pattern with an early low, which we got. Monday's pattern should also have an early low, and Tuesday should have an early high. I wasn't looking for a lot of action Friday. This is more than I thought we'd have. And I think the real action is going to happen early next week, when I think we're going to break out of the current consolidation in grand style. Well, here's the MEJT software. We had a buy early on. It's set, and that worked. Says the move was a false move. Gives us a target of 2450.88, most likely by early Tuesday. Says the late rallies false, gives us a target of 2456.43, most likely by Monday's close. As always, if we gap sharply in the undesired direction, these are very likely not to print within their preferred time frame, but if we don't gap up and promptly take out this high, these are the targets. Well, rallying all day long on a Friday typically continues into the close and continues into Monday's open. So it's kind of unusual that we dropped like a stone after rallying to all-time highs. It's particularly curious that after rallying all day long, we couldn't hold the middle of the day high. It's a negative pattern unless we invalidate it by gapping up and promptly taking out this high. Also, the last move on a Friday, when it's unidirectional like this, continues into Monday most of the time. So most of the time we'll drop early Monday. Now, usually when you have a wall of selling into the close, it's panic selling by retail customers who want to get out at any price. That certainly is not the case when you've been rallying all day long on a Friday to all-time highs. It should be one of two things. One is profit taking. If it is profit taking, it should be reversed promptly at Monday's open by gapping up and taking out this high. The other option is that it's selling by professionals who know that all the bids have dried up. In that case, it should continue into Monday's open, ideally by gapping down. There's a lot of resistance at this high, and frankly, if we go much higher than this, then a lot of the negative arguments are going to fall by the wayside. Here's your diamond on stilts. Here's your left stilt. Here's the right stilt. You don't know which of these points to take, but if you take the high on one of these lows and set it at 38.2%, you get a target of this high at the 61.8 and a target at Friday's high right at the 100. Friend Mr. Gann liked to divide things into thirds. So if you take this low and that high, divide it into thirds, you get that low right on the mark, and you get this resistance support level pretty nicely. So those argue for this being a plausible high, but I will say I thought this was an important line, and that breaking over it is kind of an accomplishment. The accomplishment does not count for anything if we gap down on Monday and don't fill the gap. We are still on combo and sequential sells on the weekly chart, but on the daily chart we are threatening to invalidate the pattern by going over the stop loss. In order for this to count, and by the way, invalidating this stop loss, DeMark says it's loosely interpreted, and we've invalidated it by less than 1%. But to me, it shouldn't go this high. But in order for it to count, there's something called the critical qualifier, which means you have to go higher than Friday's close. So if we gap down, this invalidation does not count. The significance is if you invalidate it on the daily, it's usually a matter of time till you invalidate it on the weekly as well. So if we continue much higher from here, it means you've overcome strong resistance and a lot of sell signals, and there could be much more to go on the upside. Now, I said in June that July 17th and July 19th were my next change in trend dates. A change in trend doesn't have to be a top, and you've consolidated like this. It could be the start of a new acceleration up. But there are some other people who have totally different methodologies who call for change in trend the same time, early next week. I found out from somebody else this last week that one of the people who called for a change in trend and called for it to be a high was George Lindsay. And using his methodology, he calls for a high Monday. It would be quite interesting if his three peaks in the domed house pattern and his timing pattern both worked. As I say, I haven't seen this three peaks in the domed house print often enough to have the confidence of some other people that it's going to work, and I think that it's predicting a low price, which I think is out of reach. But if we start dropping from here, it would be quite an accomplishment for his methodology. I think it's going to be very telling what happens early Monday. If this is a false move, I think we should gap up, overtake this high, and I think a lot of the sell signals are going to be invalidated, and we should have a good strong move up. But there are a lot of things saying this high will hold, and the confirmation of that would be if we gapped down Monday. If we did, I think these prices would print, and if we just undertook today's low, Friday's low, then in addition to the Lindsay sell and the DeMark sell, we'd have a Trader Vic 2B sell because we broke over the old high, and undercutting the low of the bar, which breaks the old high, gives a 2B sell signal. We have a lot of sell signals in action if we get the big drop on Monday. So I think Monday's trade's going to be very telling. I look for us to break out of the consolidation, most likely in grand style. And I think early on we'll see if the Lindsay stuff works for the high here and everything else works for the high here, or if it fails big time. Monday should be interesting, and that's today's call.